Can you see the slide? I gotta get a new picture here because I live along Central Park. I gotta get a New York picture of the park here. There's Rose. I didn't hear anything about an emergency meeting for the Fed, Chris. I don't know what that would be about. I don't know what that would possibly be about. There's no meeting scheduled for the Fed until March. Ah, there's Kathy. Got some regulars here today. Yeah, that sounds bogus. You got to be careful about real information and false information. There's so much out there. And again, what do? I focus on price action. And again, I'm going to be flipping back and forth, just really show you here quickly. Can everybody see my chart? If I go back and forth, can you see the QQQ? So I focus on price action. So Chris just said, oh, something's happening with the Fed. Maybe it is. But bottom line is, if you're looking at the price and the chart, you don't have to worry about what the news is, good or bad. Or if it's even fake. You know what I mean? So let's get going here. If you have any questions, you can plop it in the room. Again, if you want to chat me, you have to chat me directly in the chat box, or you can email me if you have questions after the fact at melissa@thestockswoosh.com. We're going to talk about learning how to short. I had this webinar planned for today, and it's a great time to talk about shorting. Why? The market fell off a cliff today. It fell off an absolute cliff. Could not have planned a better day to do this lecture, actually. And we fell off a cliff yesterday, too. So it's been a really good week. So I appear on TV today. I talked in Charles Schwab, talked about the stock market, talked about the sell-off, talked about earnings season, and I will put the clip from today up on my YouTube if you want to go follow me on YouTube. If you have questions, you can also call me at 929-3200-GAP. If I don't answer the phone, you can leave me a voicemail and I will call you back. I am in New York, so I'm Eastern time zone, so keep that in mind when you call me, or you can always email me and I will get back to you as well. So many of you are here. Some of you are already trading. I know some of you are trading, and some of you are thinking about trading with me. Some of you are doing this part-time. Some of you are retired. I know from talking to some of you, I recognize in the room, and some of you are thinking about trading for a living. I had some new people actually that did the class at the end of 2025 that, you know, are trading now full-time. You know, so some people just want to do this for a career. They want to work from home. They're tired of their job. They're tired of whatever they're doing. And the nice thing about trading is obviously you can work from home. So I find that when I do these lectures and when I teach people, when I'm talking to people in a group like this, a lot of people do a lot of different types of strategies. They're trying this, they're trying that. Sometimes people, though, waste a lot of time on things that don't work. I don't know why. Maybe it's like the guilt or something, where somebody is doing a trading strategy and they've been doing it for such a long time and they just almost feel like guilty giving up on it. Do you know what I mean? Like, or if they paid for a class and they're losing money, they don't want to quit it, like, because they feel like, oh God, they have to, you know, do this thing because they paid for it, even if they're losing money for like the last 5 years or something trading it. Like, don't feel guilty dumping a strategy if it's not working for you. Do you know what I mean? And again, sometimes you learn something and you make mistakes and it takes time to learn it and there's a learning curve. That's true. But again, a lot of times I've found, talking to people, talking to strangers, talking to new people, that people waste time doing things that just flat out don't work. So no matter what your goals are, though, to trade, it's very important to learn what to do. You could be any age and you can learn what to do. And I think it's important to look at learning as something that is enjoyable and fun. And, you know, again, learning is fun. If you look at it like, oh God, this is going to be so much work to learn something new, it's going to tax my brain. No, the idea is to learn something that's going to help you make money. So that in and of itself should be the motivating factor for you to want to learn something new, to want to open up your mind and your brain. When the light bulb goes off and something clicks, and then you realize it, again, if you decide to come and learn my system and you trade with me, a lot of times I say things that do click then for people, and that it all gets to be exciting. But again, making money should be the motivating factor for you to want to learn and focus on it. Because I'm telling you, if you understand what to do, It helps you in the good times, but it helps you even more in the hard times. Do you know what I mean? And I said this in the last webinar I did 2 weeks ago. People are going to have a difficult time this year because they're going to do the same thing they did last year, and it's not going to work. And it's already not been working. And what do I mean by that? I mean buying the dip. Okay? So again, we're going to talk about that more today. But learning how to trade before risking your money is really important because it helps you then not bleed out money, lose your account, get into the doldrums where you feel depressed and upset, and again, just waste time. I'd rather see people start small, trade small with me, learn as they go. You have all the time in the world. You have forever. You have the rest of your life to trade. So shouldn't be no rush where you got to do it, really big. If you have a big account and you want to trade big size and you want to trade an advanced size, fine. But there shouldn't be any rush to learn it, okay? So again, what is my strategy and what do I do? Today we're going to talk about shorting. Great day because a lot of stocks sold off today. We were in things, though, going into today. We were in shorts. We were in puts overnight. We were in puts overnight going into yesterday. So one of the reasons we had a really good week is because I saw the sell-off early. And so really getting the direction right counts. But I'm also a stickler for entries. I'm usually early. So I'm usually so early that sometimes a trade might be down before it goes. So again, chasing something is not for me. That is not what I like to do. And again, if you traded with me, I know some of you are with me. I see Steven here. I see a couple people here actually. Rick's here. Again, you gotta look at what's going on and go through the process and the system to say, wait a minute, whoa, this is a short or whatever. And today we're going to talk about shorting because, again, shorting is something that happens almost every single day. You can find something to short, number one. But in a bearish market or a market that's selling off, which we've seen the last 2 days, it's very difficult to find longs. Now, when I was on Schwab today, actually, the girl was poking and prodding me to tell her something that I liked long, and I mentioned a few things. But the fact is that it's very difficult to find anything to go long if the market's selling off. Unlike if the market's rallying, you can easily find stocks, actually, that are selling off to short when the market's rallying. So it's kind of different. But anyways, let's get back to what we're talking about here today. We're talking about shorts, we're talking about gaps. So that is what my strategy is based on. What is a gap? For those of you who are new and you never heard what a gap is before, we're going to look at it. This was PayPal. So PayPal had a gap. So the stock closed here at 4 o'clock and did what? Gap down. So at 4 o'clock every single day, the market closes. And at 9:30 the next day, the market opens. So you always have a close and an open. So this was a bearish gap. So again, this might have rallied. It didn't. But what do? I find the gap every single day. I look for a new gap. And then I go through a process where I'm trying to figure out what's this guy going to do. Is it going to rally or is it going to fall? So again, if the stock's going to rally, you don't want to short it. Why? You'll lose. If you go long a stock that drops, again, you're going to lose. If you want to make money, you have to get the direction right. So a lot of people, I find, don't understand how to short. And some of that comes from the fact that the market is bullish a lot. I'm not going to deny it. I mean, I've started trading in 2008, and most of the life of the years that I've traded, and almost the 20 years I've traded, the market has been bullish. But again, like I was saying, you can make money shorting in a bullish market too. But in a market that's selling off, it's hard to make money, I should say, if you can't short. Like, you're going to have to learn how to short and what to short. Do you know what I mean? And where? And we're talking about this with the entries. Anyways, this is a gap. So we did PayPal, we shorted it, we did puts, and then it fell. Okay? Now, this is a daily chart. So someone was talking about news or this thing, that thing. There's a million news things, 24-hour news cycle we're in. You can go through the process. This PayPal was earnings. You can read about the earnings if you want to. If that helps you, do it. I don't do that. I don't have time. I wouldn't even have time to sleep if I was doing that, actually, because there's so much to do and so many things to look at in a day. But anyways, I look at the chart, and that's where I'm seeing the gap. And again, it's a daily chart. So a gap is the difference between the close and the open. Stocks gas moves every single day. So, like, again, right now, it's a busy time. It's a volatile time. So we're getting a lot of gaps. It's one of the reasons we've had a very good start to 2026. Does it mean there are times when the market is slow? Yes, there are times when the market is slow. Of course there is. But you should know what to do or what to look for every single day. And when you get the good times, you really want to capitalize on those times. Do you know what I'm saying? You want to hammer it. You want to go after it when you get one of those times. So not every gap is a good gap, or what I call a golden gap. I'm looking for the gaps that are predictable. So again, how do I do that? I use my gap rating system. So here was the PayPal trade. So this was yesterday. We could have done this today though too, but we did it a day trade. Now someone's asking me, how much money do you need to trade? If you're going to trade on a margin account, you need a margin account at a retail broker. The minimum to go in and out as much as you want in a 5-day weekly period is you have to have 25,000 or more, and you get 4-to-1 margin, unless you go prop. Okay, if you want to do, a prop firm, then you have to talk to that place, see what kind of margin they're going to give you, and how many trades you're allotted. If you cannot set up a margin account at a retail broker, you can do options, which I do, and I will talk about some of those today too. We did an option in PayPal. I don't have it in here, but we did. Okay. So again, this, just so you know, is a margin trade, and if you were in the room with me, you would have done the trade. I called the trade in the room. Entry was $42.50. So again, I've been trading for almost 20 years. So I upped my size this year at the beginning of the year because I've had a good year last year. So I'm averaging around $5,000 a trade on my day trades. Then we added, doubled up on the position, and then again, average price was $42.72. Got the drop. This was again yesterday, $41.50. Made $9,760. So again, if you're someone that is looking to do less size, here's a smaller. I'm just going to show you a $1,300 risk. With the ad, you would have had 2,000 shares. You could have made $24.40. So what I'm saying is you would have needed a margin account to do this trade. I don't think this is an expensive stock. I think this is on the lower end or medium priced. Again, you could have done this with a cash account or 2-to-1 margin, but you need 25,000 minimum to get 4-to-1 margin at a retail broker, or you just buy the put. But if you want to do the trades with me in the room, I'm giving you the numbers. You short it, I tell you the stop, I tell you the ad, I'd say get out, and you get out with me if you want to get out. So again, what happened with the PayPal? Let's go over it. PayPal was a short. So a lot of people, I think, would have looked at the PayPal and considered going long yesterday. Remember yesterday, the market didn't fall off a cliff immediately. If you remember yesterday, how we transpired on the day. It took a little bit of going before we fell, okay? And so, again, lots of times people want to go, whatever they're doing, any day trades necessarily, could be an option, could be a day trade. They want to go with the market. The market doesn't always do what you think it's going to do. You have gap ups that fail. You have gap downs that flip and rally, okay? So you have gaps that are happening and market moves that are happening all the time that may not be going and doing the things that you want to do. But again, talking about the market, just because of what happened today, specifically in the market, and I'll pull up the chart of the Qs in a minute, what came in? You could say, well, it was about Iran. Yesterday, you could have said it was the shutdown, but then the government opened yesterday, so but we kept selling off anyways today. You say, well, wait a minute, then it wasn't that reason. Maybe it was Iran. You could always say a reason for why the mark or stock specifically is selling off. It shouldn't matter to you. The idea is that you're trying to find the stock that is going to sell off. Something that is going to have a panicky action. And one of the reasons that I got into shorting in the first place is because of the fact that stocks have big moves to the downside. And panic comes in very quickly. And I am very aggressive. I'll say this, I am very aggressive with my trades where I am in my trades very early. Okay? So again, I'm in my trades early because of the fact that I want to get a good entry. And then if I want to hold the trade or get out of the trade or add to the trade, I have more options to do that. And again, I see some people that came in late. If you want to chat me, if you have a question, you have to find me in the chat and ask questions. So Richard has a question. Do I sell the stock short or do I buy puts? I do both, Richard. Now, do I do both in everything I do? No. But I did happen to do both in the PayPal. So there might be a stock that doesn't even have an option available. Therefore, I'm not doing it. There might be a stock where the option doesn't have any volume and I'm not doing it. There might be a stock that I don't want to do the day trade and I want to do the option because it's easier to put on a couple options trades and let them ride out and hold them overnight, whereas I'm not doing 5, 6, 7 day trades every day. I'm typically looking for one stock, one pick per day as a day trade, maybe two. Today I could have done a million things, actually. I didn't. But I could have done a million day trades today, but I didn't. But I do both. Okay? And if that's a lot for you to handle, then don't do both. Do one and do the one that you're comfortable with if you're used to doing options. That was a good question. Anybody else? Anyways, the idea of panic. If you're waiting for the reason, and a lot of times people in the room, if you've ever listened to my room video, sometimes I'm talking and we say, whoa, and we start to sell off, and then you're like, oh, something just happened. You can't even find what happened. You could go to CNBC, you could go to Bloomberg, you could turn on Fox News. It takes 5 hours to find out what happened. Do you know what I'm saying? So if you're waiting to hear the news before you take the trade for confirmation, 80% of the move could be gone. Do you know what I'm saying? So you shouldn't need that anyways. And it is always often not what you think as well. So again, remember when last week, again, if you're really into this stuff, and I talk about this stuff when I have to talk on TV, Trump announced, I think it was last Friday, it was only a couple days ago. Actually, today's only Wednesday. Tomorrow's Thursday. It wasn't even a week ago. Trump announced his new Fed pick. If I was a betting woman, just on that announcement, you would have thought the market would have rallied. And it just would have gone poo, and it would have rallied. That was the 30th. So Friday, that news came out. Market didn't give a crap. You would have thought that the market would have liked the fact that Trump was picking someone that was going to lower rates, but the market didn't have a positive reaction to that. Do you know what I'm saying? So if you're looking for the news or you're looking for things like that, it's going to be rough going. Or you're going to get trades late. Or you're going to be chasing it. Do you know what I mean? Or it may not even go in the direction that you think. It's the same way with earnings. You can have fabulous earnings in a stock, and then you can have a good reaction. Or you could have a bad reaction. So it doesn't always add up. Anyways, any other questions here, let me know. So how do I find the best shorts? I'm always looking for the gap. I'm skinny in the morning. How do I make the picks? I developed a rating system, and it's so good because this tells me what I want to do. If I get the rating system, I do it. If I get the score. If I don't get the score, I don't do the trade. I don't flip it. That's it. And then you don't have to get in your head about it with the news. I think a lot of people are definitely in their head because right now we had a 2-day sell-off. People are already saying we're extended. Again, when I was on Schwab's network today, again, the guy before was talking, and then the girl was asking me questions. I could tell where she was going. Like, again, like, should we buy the dip? Like, that we've sold off big, we're down this much percent. None of that has anything to do with anything at all. No one said that something can't keep going down, and no one said something can't keep going up. Because both things can be true. So if you're just like, oh, I'm going to do this because it's extended, you don't even know what extended is. Do you know what I'm saying? What I think is extended and what most people think is extended is the opposite. Or not even close. So having a rating system helps me, support me in making a good choice where I'm not trying to make an opinionated choice. Do you follow what I'm saying? I don't know if any of you watch, again, I appear on TV, I've never been on with Kramer. Some people love Kramer, some people hate the guy. But long story short, you know, he doesn't really have anything where you could say, I'm going to decide a trade, you know, the way that Kramer does. He tells you what he likes to buy. He tells you what he doesn't like, but he doesn't tell you really how he came up with that conclusion. He's giving his opinions. Do you know what I mean? When I say, you know, that PayPal's lower, when we're doing the trade or whatever. We did AMD today. We shorted it. It worked. I'm not saying that based on my opinion, based on nothing that you couldn't figure out yourself. Do you know what I'm saying? Whereas Cramer's opinion is subjective. Does this make sense? So the fact that I'm doing something that is intellectual, that is a procedure that I go through to go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 and add everything up is something that I teach people and you can do yourself. And it's not subjective where you have to talk to me and see what I think. Now, a lot of people want to know what I think because obviously if I'm trying to narrow something down and there's 10 things to look at in the morning and you want to know what's going to work big, then you want to know what I think is the best based on my experience of trading and shorting. But at the end of the day, what I do is something that you can learn and replicate yourself without me versus someone like Cramer that is an opinion where it's subjective. Does any of this make any sense? Hello, is anyone there? I hope it makes sense. When selling a stock short, is it sell short and buy to cover to take the profit correctly? Yes, Rick. Perfect. You buy the put to enter it and sell it to exit it. If you're shorting the stock, you're shorting the shares. You can talk to your broker, but you should have a short button or a sell button. It'll basically do the same thing. And then you buy to exit it or buy to cover. So yes, correct. Jerry gets it. Jerry's trading with me. Jerry's doing good. Rose understands as well. So anyway, shorting gives me a niche. Why? Because most people prefer to go long. It's the idea of buying something at $1 and it goes up to $2. Everybody's been a big hyped up about gold and silver. I get it. They had a big run up. Again, people thought that was extended and it kept going and it could keep going even now. But again, people love the idea of going long. So people love to go long. They'd not necessarily love to short. Why? Maybe it's because people have money in their retirement accounts. And so when stocks fall, people sometimes get upset and they say, oh crap. But no one should be logging in and looking at their 401k or their stock account every day. You don't get a monthly statement. You should get a quarterly statement. Things change constantly. You shouldn't be, looking at your retirement account every single day unless you're trading it. If you're trading it, it says that's a different story. And some people are trading their retirement account. But if you're actively trading it, that's one thing. And you could buy puts, which is a short of your retirement account. You can't short your retirement account at margin. But maybe it's because in people's minds, they have a retirement account. And when the market falls, then they're like, oh no, my retirement account is falling. By the time you get the statement, the account could be back up. So don't let that get in your head about trading. What I do is based on momentum. I will play the momentum. I will tell you right now, we were in trades going into today that were up more today because of the sell-off. We did new trades today despite the sell-off. So that's not something a lot of traders would do. I'm playing with the momentum, not against it. Do you understand? That's another niche that I didn't even really get in. I didn't even write about in here. Understanding how to trade. I'm not talking about investing. Don't get this confused. I'm talking about trading, active trading, trading. You're in, you're out. You take a put, you're in for a week or a couple of days, you're out. This isn't, you're holding it for the next 10 years. You're not shorting the market for the next 10 years. Do you understand? That's not what this is about. This is, you want to make money today, tomorrow, between now and next Friday. Do you know what I'm saying? We have some questions here. Rick has a question. Okay, got Rick's question. Pat says, totally makes sense. Good. Now, what else makes sense is that people get scared when stocks fall. And they get really, really scared, and then they want to sell. So they're like, oh my God, I can't hold this thing anymore. I'm selling it. I got to get out. That's fine. If you're in something and you're up in the trade and we're bullish in something and you were long, say the market or whatever, yes, you can take profits. There's nothing wrong with taking profits. Why? Because you could always get back in. Again, there's nothing wrong with that. But when people sell, know that pushes the stock or the market or whatever you're doing. Again, when I'm saying the market, I mean the market ETFs with the QQQs and the SPY, or you could be trading the Dow. again, the selling pushes the market or the stock down. We're shorting the scaredy cats. Okay, we're shorting against those people. And again, I'm in really aggressively and early. Rose has a question. On your options, do you give the entry and exits, and how long do you hold? If I call a trade, Rose, you take the trade when you get the trade unless it comes in the pre-market. So if I send a trade at 8:30 in the morning, you can't do it. You would do that trade into the open. Everyone is going to pay a slightly different price, if that's what you mean. Some people wait for a pullback. I don't like that word, and I will tell you I don't do that. So many times I actually pay up more than probably what a lot of people are paying in the options that I'm doing. Sometimes that works into people's favor that wait for the pullback. I don't trade like that. Sometimes the trade goes and then people don't end up doing it because they miss it, because it could go right away is really quick. Do you follow me? Now I may wait a minute or 2 or 5 till the spread tightens, because sometimes right out of the gate something is a tight spread. But I'm not waiting like an hour, if that's what you mean. And so that's a personal preference. It's nothing to do with the system or anything else. You have to know that we're not trading for pennies. If I call a trade and it costs $5, you're like, oh crap, this costs $5. I'm going to wait for it to shake around. And I pay $5 and it drops to $3 and you pay $3. I'm paying $5, not because I think it's going to go to $6. I'm paying $5 because I think it's going to go to $10. So yeah, you'll make a little bit more than me if you pay $3 and it goes to $10, but it may open at $5 and go straight to $10, and then you don't get it. I don't know if that makes any sense. And I do give exits, which are targets, in the newsletter. What else? Another question. What was the reason for not taking any trades today? I didn't say I didn't take any trades today. No, we did AMD, I said. I don't know, maybe you weren't here, Richard. Maybe you signed in late. We did AMD today. In fact, I did it twice. I did the first trade, got stopped. I stayed on top of it. I did a second trade, and it was a big trade. And I held it, and I had a great trade. So, yes, I did do trades today. I don't know where you got that I didn't. And we did new puts today. So we did day trades today, and we did puts. But the only thing I traded today, a day traded, was AMD. Maybe you signed in late. Jerry is saying yes. CBX was another good one too. Jerry's on the newsletter. Jerry, you've got to get back to the room. Okay, what else? All right, so again, talking about, you're like, oh my God, I don't have $1 million. How am I going to do this? Listen, if you have a small account, you can still short. You can buy a put. I know everybody wants to make all this money, and that's great to have goals. I had lofty goals too, but I will tell you, it worked against me at the beginning. If I could redo my whole trading career and start from square one, it all worked out okay for me. But the fact is, my journey was hard at the beginning because I thought I was going to make all this money, and I risked a lot at the beginning. So I'm saying to you, you're better off learning and starting small, and then gaining the confidence, not only in yourself, but in the system, and then increasing your size. There's no time frame for that. It could be a week, it could be a month, it could take 6 months, it could take a year. You'll know when you're at that point. Do you know what I'm saying? So no one said you have to do more than one contract. You could do more if you want, but I'm saying if you have a small account, you're better off doing it with small size and slowly building the account, not getting crazy, and learning as you go. And people have done that with me. So you can still do puts without a margin account, and you can do it with a small account. Here, this was another, we did so many trades on this, it's just, I can't even put them all in here. We did the Oracle 175s. We've been in this for a while. So 130 was the expiration date for the one I'm going to talk about here, but we did 122. Let's go back here. We did an Oracle 175. And I just want to show you this here where this fell off here on the 29th. Anyways, long story short, this trade was down here before it went. So this was an example where I was telling you where sometimes things take time and where sizing is actually really critical. A lot of people wanted to go long Oracle. Remember, we were just talking about people say, oh, it's extended. So people thought this was extended. They went long it. We were short. We were in the butts. I was down, and then it went poo, and it went. And it was a nice trade. So anyways, here was the trade. So I did this on the 22nd. Again, this was an expiration date. I'm usually doing the weeklies. This wasn't expensive, but all the puts have been getting pricier over the last 2 days. But anyways, $4 was the cost of this. 20 contracts as an advanced trader risk, sold at 13, and it was a 225% return investment. A nice trade. Profit was 18,000. If this had gone immediately, this might have been a bigger trade actually. Again, don't kill something just because it doesn't go right away. As I say that to people. What if you risked $1,200? Again, you could have made $2,700. What if you did one? You could have done one contract. Just one of them you could have done. So again, don't kill something just because it goes against you, and that means that you have to stay within your risk parameters. So if you do one contract and you're down in it for 2 days before it drops and goes, maybe you'll be less stressed when you trade. But this goes back to the system. This goes back to the learning process. This goes back to seeing the move before it actually occurs. Like, to be able to see that it's going to go before it occurs. Like, there's a couple people in here that are trading with me. Rick is new. Jerry's been with me for a little bit. Who else is in here? Steven is in here. For those of you that have traded with me, the Miller, I don't know who that is. What's your first name? I don't recognize who that is. For those of you that have traded with me for even a month or two, you know that I say things. I say, this is going to go here. And then it does. And then you're like, holy shit, how did she know that was going to do that? It's almost like I have a crystal ball. The Miller, I don't know who you are. What's your first name? If you're trading with me, I don't know who that is from the name. One of the ones that we did that with was, let's go back over here, the AMD. So again, I said this is going to go to 205, probably going to go to 200 today. This was the trade that we did today that was a day trade, and it went to 199.15. I had a good exit on this, but it went to 200. It went there. And I said that in the morning when it wasn't anywhere. Like, this is where it was in the morning. It was there. I said this is going to go to 200. So again, when you understand how to read price movement, this is the whole genius of the system, you'll be able to say, okay, this is going to go up to 220, or this is going to go down to 200. And this is the whole thing that you've got to learn how to do if you want to make money. Because again, if you think it's going to go down and it ends up going up, you're going to lose, or vice versa. Do you know what I mean? Back over here. I was going to say something else now and I forgot. Anyways, what you're trying to do is play momentum. So the momentum in Oracle was to the downside. So we did shorts and we bought puts, okay? We didn't do anything in this. We could have gone long this week. We did not. Actually, JPM was one thing that did rally this week. But anyways, we shorted this. We did another put in this on the 20th. So again, this was JPM. This was a bank. Stock closed here, gap down, rallied. We did puts. Took it down and boom. So we did the 305. So I'm usually doing it right at the money. You could do it underneath it, but I'm usually doing right at the strike. And again, you could do a day trade. You could do a put. We did both in this. We did the 305 puts. Again, I sent it at 7:07 a.m. So there's nothing to do at 7:07 a.m. You're just getting ready. You're watching it. You're ready to go. And that's what you're going to do. But it's 2.5 hours before the open. Okay, so I get ready very, very early. So you buy it, and if you want to wait for a pullback, great. In this case, you could have paid less, actually, because it rallied before it went. But I got in. But again, the idea is not to make 50 cents or to save 50 cents. The idea is to make a couple bucks. So this was a $4 profit or an 89% return on investment. So again, this is not, we're not scalping. We're not trying to make pennies. We're trying to make dollars. So if you did 3, you could have made $1,200. So this is a good trade. And I think this was fairly quick because it kind of backed up a little bit here. If you did it here, again, it was a good trade, and then it kind of backed up a little bit, and then here was the momentum to the downside there. And I really didn't follow this today, why this was up today, because I didn't do anything with this today to the upside. I don't really know what happened with this today, but it did rally today, actually. Any other questions about that? So again, I could send out a trade at 6 o'clock in the morning. You're not doing it to 9:30. You could rate stuff as soon as you get up. Any other questions here? The earlier, the better. The more prepared you are that you want to know what to do. So anyways, talking about trading, if you take a trade and you want to hold it overnight, and again, we did that with some trades this week because we had the follow through. You can make more money holding options overnight than getting out the same day. There's a risk factor with that. I get it. You're taking a chance. And that sometimes, though, can pay off big, where you get the follow through the next day. And it could be in the initial morning, as soon as you get up in the morning, or it could play out on the day as the day plays out. But there's a risk involved with that. If you don't like that, if that bothers you, if you're like, oh my God, I can't hold anything overnight, that scares the crap out of me, then you could get out of every trade before 4. But I'm telling you, sometimes I'll call an option and it will not go that day. And if you kill it, then you could lose in a trade or take a loss in a trade that has plenty of time left to work and goes on to work that you took a loss in. So that is a personal decision. I'm flat every day in day trades. I never hold a margin trade overnight. How many option alerts go out weekly? It's a pretty active and busy letter. If you want to email me, Rose, I can send you the stats so far for the year, how many trades we've done. It's been a busy year. There are some times that are slow. There are some times that are busy. Right now it's busy. There's been opportunity. So we're trading. Things have been setting up. Again, I might go a week and do only 2 trades or 3. Then I might have a week where I'm in 23 things. So if you can't do them all, then you can't do them all. Then you do one at a time. You say, I'm going to do one in a Monday, one in a Tuesday, or whatever. But it ebbs and flows. There might be some days I don't call any trades. If there's no good gaps, I won't do any trades. I can't plan that. I can't predict that. I can't plan and say we're going to have 10 good gaps tomorrow. I don't know. I am looking at this, like I said, objectively and saying, wait a minute. I've got, this many things. I'm going to go through and I'm going to rate them. I'm going to pick the ones that rate 20 points or more, and then we're going to do them, But I would say there's plenty of trades. Anyway, success in the market is about mastering a skill. I've done that with the reading price, but I've also really done it with shorting. And I'm telling you, it's like a niche. It's like if, I don't know if any of you like the Olympics. The Olympics is coming up. The Olympics is Friday. I don't know how many people are going to be watching Olympics because the Super Bowl's Sunday, but I'm probably going to be watching the Olympics instead of the Super Bowl. But anyways, the Olympics begins on Friday, and Shaun White, who is a gold medalist, he's a snowboarder, I don't know if anybody knows him, he was in New York 2 weeks ago when we had that big snowstorm. He was in Cherry Hill. And so anyways, he was snowboarding in Cherry Hill. No one knew it was him initially. He was like doing all these flips and things, and and everyone was like, whoa, who's this guy? And then he took his mask off. So he has a skill set. It's like recognizable. Even if before you saw his face, you're like, whoa, this guy is like really good. And that's the kind of thing that you want to get yourself. Do you know what I'm saying? Because then you are the master. Then you're not at the mercy of the market or a Trump tweet or a Fed meeting or something like that. Then in any market, under any market conditions, you can make a killing. But if you're like, oh my God, I don't know what to do, or if you don't have the skill set, you will be at the mercy of the conditions of the trend of the stock you're trading in the market, and you still may not make it. Because again, you can trend trade something and lose money. There are plenty of things right now that are in uptrends that sold off like hotcakes today and yesterday. And you wouldn't have made money going long, but they were in uptrends. Rose loves my style of trading. Rosa, you should join. I don't know how long you're following me. I recognize your name, though. I think I've seen you before. Anyways, how do you make profits consistently? over and over and over again. You have to master a skill, and then you add size, and that's how you do it. Anyways, here's another one we did, Netflix. Everyone knows with the Netflix what's been happening with this, with the takeover, and with Paramount. So it's been a great time to short this even for the last several weeks and months. But we did a day trade in this. Again, we did this yesterday. Stock closed here, gap down, open, fell, dropped. We were looking for 80. Again, wasn't a crazy target. Entry was 81.45. Boom. Added at 81.25. Sometimes I'll do an add to double up on the trade if I feel like it has a big target in hand. So I did. So $1.25, $1.35, this is a good move. So again, 13,050, this is a nice trade. Here was the gap. Here was the sell-off. This was also a smaller risk. You could have had 2,000 shares. I made 2,900. Again, this is in and out. Do it and get out. This is a margin trade. You would have done the trade with me. You would have done the ad. You take the trade. You have to have a margin account to do it. Now, you could have also done a put, and you could have done a put as a day trade. They had something new, not every stock, but now just like the market has daily expirations, I don't do those, but now some stocks have Monday, Wednesday, and Friday expirations. That's something brand new. That's something that some of you that do not have a margin account can start to use and take advantage of. If you want to short a stock that has it available, again, not every stock does. And if I call a day trade on a Wednesday and it has a Wednesday expiration, you could buy the put, get in, get out. You're going to pay a cheaper price than you would for a Friday expiration. That's the reason I'm bringing that up. I'm not calling trades like that. I'm not doing them myself. But I'm telling you that's a benefit for people that want to actively day trade options. Now, that's something that I don't know if it's going to be every stock's going to have that, but it is something new. If you pull up an options chain, you can see it now. Rose wants to do the options with me? Yes. Then you can do that. Anyways, any other questions? So, it's hard to believe it's February already. It's February 4th. I can't believe it. Valentine's Day is next weekend. I feel like the year's going so fast, but you still have plenty of time left in the year to make money and learn. And the girl today at Schwab, she's interviewing me, Nicole Pitalitas, asked me about the market for the year. It's like, I have no idea where we are by the end of the year. I have no idea. That's too far away. You have a whole year left. Could the market fall off a cliff? Yes. Could the market be bearish for this year? Yes. Could the market also fall off a cliff and then reverse back like it did last year? Yes. Yeah, it's, again, if you're an active trader, it doesn't matter to you. We do go long too. I go long and I short, but I'm telling you I prefer to short. I'm very good at shorting. I'm telling you days like today are huge days. Weeks and periods like this where we're getting the fall through the downside, we're capitalizing on these moves because a lot of people don't understand it and aren't doing it and they don't know what to do. And instead, they keep buying and buying and buying and losing. And I expect that will continue. Whether it continues tomorrow or Friday, I don't know. But I'm telling you, don't be on the wrong side of stocks of the market for 2026 because this year already has turned out not to be the same as last year, and it hasn't been for the last month anyways. But so set your goals for the year. You've got 11 months left. You want to be in a better place by the end of the year, by Christmas, than you are now. Set your goals for that. That's realistic. You know what I mean? And I think that's plenty of time. Or most of the trades are the open at 9:30, you trade throughout the day. No, most of the trades are between 9:30 and 10. And occasionally I will hold trades. Again, we've had what I call power trend days, today and yesterday. Those are not every day, Richard. So sometimes I will hold a trade, but that is only really on a power trend day or something. That's not every day. Most days I'm done quick and out in the morning, and it's between 9:30 and 10 when we're entering the trades. Rick, we're going to go over that in the class. For now, you should be following me though in the room. I have seen you in the room now coming. Are you following me in the room, Rick? Are you staying there the whole morning, or what are you doing? Because I've been like, we talked about the AMD today. We talked about 205. We talked about 200. I don't know if you heard me, but I would be in the room every day, Rick, for sure. But you're going to learn that in the class. Rick signed up already. What else? Any other questions? But for now, Rick, I would just be in the room every day. Listen to what I say in the room about targets and follow me in the room. Or you can always ask me. If you can't get into the room, you can email me. Anyways, when do I trade? Again, first 30 minutes of the day. I'm looking for large moves that happen in the first 30 minutes of the day. I'm looking for a gap every day. I'm mostly shorting, so I'm looking for bearish gaps. I'll only short bearish gaps. I won't short bullish gaps. Is every bearish gap going to fall? No. Is every bullish gap going to rally? No. It's not that easy. So that's why I developed the 26-point criteria. I'm only looking for golden gaps, gaps that have a high probability of working. It's about probability. So the golden gap is a rating system that looks at 26 points of the daily chart of a stock. The rating system is a checklist. I go through it every morning. 1, 2, 3, 4, 5. The checklist tells you what to look for in the price of the stock. And the points predict price direction correctly when a stock is gapping. So again, I'm only doing gaps. So I'm not trend trading. I'll go against a trend. I don't care. This has nothing to do with the trend. It's nothing to do with the market. The points tell you where the money is flowing. Why does this matter? So you know what direction to take the position to profit. Because again, if you're in the wrong direction, you're going to lose. And I would say golden gaps have about 80% of their move. This is, again, outside of a power trend day like we had today, but 80% of the move most of the time is in the first 30 minutes or hour of the day. So that is why I'm mostly done with my day trades in the morning early. I call it the money move. Yes, you can hold longer if you want to. Get out of half. You can hold past the time I exit the room. You can play the move for, though, an option. I think that's easier to hold. So again, holding options is you have the flexibility. If you're doing a trade for 5 days, 6 days, 7 or 8 days, you don't have to get out of it that day if you want a bigger move. And again, if that's something you don't want, then you get out of it if you're up. But I wouldn't kill it if you're down, is what I'm saying. Rose, email me. If you want to sign up, you have to email me for the sign-up forms. You cannot sign up through the website. So email me at melissa@thestockswoosh.com and I'll send you the forms. Any other questions? Anyways, big profits come in money moves. I mean, again, just going back here, just showing you here this extension for this AMD. Again, stock closed here yesterday at 242.11. Gap down here today and open at 215, rallied. High of the day was 218.58, dropped. First we were looking for 210, then 205, then 200. Again, you've got to be watching it. You're like, okay, it's going to get there, it's going to get there. The market's going, we're getting it. Came down, broke, went to the dream target, went past it, 199.15. So again, this is what I'm talking about a money move. That is a big move even for the stock. It's $19, almost 20 bucks from tip to tail. That is how you can make money. And whether you did it as a day trade, whether you did it as a put, it doesn't even matter how you did it. That's what you want. And that's what you got to look for every day. Do you follow me? There was something else I was going to say, and I forget. Anyways, you want momentum. Momentum is very, very important, okay? So success and large profits come from the quality of the trade, looking for something that is going to have a quality move, not quantity, not trading all day for 6.5 hours, not doing 100 things every day, looking for the good ones, okay? The more plays you have, the more potential you have for losses. Now, again, I'm active on the newsletter, but I'm still looking for quality. So that's why some weeks are busier than others, because some weeks there's not a lot of good ones. And I don't know. I don't know until I get up in the morning and I see it. You know what I mean? So the key is the quality and the rating. So again, it's a checklist. This is what I teach in my class. So I teach a class that teaches the checklist. You go through the 26 points. You have to be there live. The class is online. You can be anywhere in the world and take it. You listen to me talk. I go over the points point by point, and you learn it. And you see charts, and it's all technical analysis, the whole thing. So you got to have charts. You got to have live data. So it's called the Golden Gap System. The Golden Gap System is a 26-point professional bearish gap rating system. The purpose of the system is to help you evaluate which gap to trade each morning using a checklist. This checklist helps me figure out what I'm going to do, or if I'm not going to do it at all. I'm looking for high probability of directional bias for the entire day, like AMD, okay? I want a big move. Again, AMD did that too. I want early confirmation of my bias and the move between 9:30 and 10 a.m. I had that with AMD as well. And precise entries with follow through and a good risk to reward. Again, some days are bigger than others, but I would say 1-to-1 is what I'm looking for. I feel good about, 1-to-1 is good. If you take a trade and you're at 50% in option, and you want to get out, that's fine. And Rick, you're here, you're new. You're doing well. If you feel like you're taking profits early, that's okay. If you're doing 4 trades, Rick, and you're in 3 things are up, you could get out of 3, hold 1. Do you know what I mean? I don't think anyone should be holding everything right now. I didn't hold everything all week. I did not. You got to take profits. So again, tiptoe into it, especially if you're new. But you should never hold everything all the time. And I shouldn't say never. I shouldn't say that. There are different times when I will see something where I will say, hold, okay? But that's not like all the time, every single day, every single week where I'm saying hold everything. Like there's different periods. And we've had those periods. The tariff sell-off last year was one of those periods. We were in those shorts when that happened. Rick's right. Can't go broke taking a profit. And it helps your mentality. It helps it's not just your account. It is the fact that you feel good about booking the money. You feel good. You feel something positive. You have a positive outcome. You're reinforcing the positive outcome. Do you understand how important this is? I think a lot of times people are so hesitant to sign up for my class because they've taken classes or they've traded and they've lost money and they don't have this type of positive mentality. Once people start trading with me and they start seeing a series of green days, that reinforces the positivity. Even if it's just $50, $100, $200 a day, and they get out quick. There's one girl in the room, she's booking money as soon as it goes. She has a small account. She's really super new. She feels good every day when she gets out and she's up. She can't stand to let it back up. And that's fine. It's totally fine. Do you know what I mean? It's reinforcing the positivity of actually booking money and being green. And like Rick said, you cannot lose money if you get out when you're up. Again, there's some things that I think are worth holding. But, if you're new and you want to book the profits, there's nothing wrong with that. So anyways, how do we get the sell-offs? With large institutional money. They dumped the market today. Again, why? You can go over all the reasons why you think it happened. There was a big sell-off today in AMD, and you could go over the reasons why you think that happened too. But it's large institutional money that dumps stocks, sells, and shorts too. So why trade gaps? Why do they work so well, and why do they pay so well? Because gaps are created with large institutional money. That is what makes a gap in the first place. The professional gaps that happen and play out in stocks are formed by one thing and one thing only, large institutional money. Therefore, you need a way that will help you pick the correct direction to play the gap. It's not just as easy as going with it or against it. It's not just as easy as saying, oh, it's going to fill the gap. No. If it was that easy, no one would ever lose any money. And it's not. And every day and every stock and every chart is different. So you're looking to confirm that the large money will flow with it, and then you take the trade. And whether you do it as a day trade or whether you do it as an option is totally up to you. I like to do both, okay? But when I started trading, I was doing day trades. I didn't do options I didn't start doing options until like 2015. So I've been doing options now for 11 years, but I didn't do options when I started trading. I was just day trading. So I'll probably always day trade. I like to day trade. I like the fast moves. By having a formula to rate and qualify the gap, you get confirmation and conviction. And that's extremely important, that the institutional money is on your side and then you play it. Gaps are an event, like your birthday. Yay! It's a bit like the Super Bowl. Super Bowl's this weekend. Olympics is this weekend. It's an event. It's going on. So anyways, a gap is very similar to that too. And it creates a sense of urgency. Thus, an action is being forced by participants of the stock. This is why gap trading is incredibly powerful. So trading gaps is a powerful and profitable way to trade because you're trading on the side of power. You don't move the stock. You will never move a stock. It doesn't matter if I had 1,000 people in the trading room, which I don't, we wouldn't move stocks either. We're not trading low float stocks or penny stocks or cheap stocks. We're trading stocks like that, I mean, look at the volume in this today that we did. That's insane. Right there. Over 106 million. So again, we're trading things that are, I call them high flyers, whatever you want to call them. You get it right. The momentum carries you. It carries you, but you have to get the entry right. And you have to get the direction right, and you have to get the pick. And again, one of the reasons I love to short, the moves set up quick, fast, go big, and a lot of people don't know how to train shorts. A lot of people just don't. They can't even have a conversation with you about it. They don't even understand what's happening. Like, trust me, this is me doing this for a long, long time. So I really know that I have a niche with this. And that when people hear me and they realize that, then it starts to get on their radar, and then people come and take the class. But I will tell you, people take the class and they're still like learning stuff even as they go. Because people in general, and I'm generalizing here, really are just, shorting is so new to people. You know, doing it in the manner that I do, I should say. Anyways, we're looking for the institutional money. We're looking for the sell-up. And then, again, I'm trying to get in very quick, aggressive. You got to learn how to make entry decisions and exit decisions based on a small time frame. I teach this in the class on the 1-minute chart, which is a very high degree of focus and accuracy. So I use that for my entries. So using the daily chart to make the decision for the stock pick allows for accuracy in the direction, and using the 1-minute chart allows for good risk-reward trades with accuracy. So again, everybody wants to make a lot of money trading. You can't risk more than you have to risk, because you have to think about your account. You don't want to lose your account. You have to divvy it up. You have to look at the type of account you have. But if you learn good information and you have a good strategy, you can set goals for yourself to build your account and make large profits over time based on the size that you're taking. Like I said, if you risk $100 and can make $500, that's an amazing trade. That's 500%. Even if you only have $5,000 in an account, that's a great trade. You've got to look for quality trades. And again, trading the market is exciting and fun, and we have had a very exciting time. Not just this week, we've had an exciting time this year. A lot of things are moving. Not just the last 2 days. We've had big moves in a lot of stocks this year. I don't know why. It's earnings season, but even before that, we were having big moves at the beginning of January. I don't know. Maybe it's just there's more people trading. There's a lot of volume in the market. I don't know. But I mean, I've traded, like I said, for almost 20 years, and we're seeing a lot of volume and volatility and movement and follow through lately this year. I don't know, but it has been a great time to trade. You never know. Not every year is the same. It's for sure. So anyways, getting back to what I was saying, one individual can trade the market successfully as a career or part-time. I have people that come in the room in the morning, they bop in the room in the morning, they go off to their regular job. You can do this however it works for your schedule, but in order to reap the rewards the market has to offer, you definitely need a quality system. I do the same thing every day. That's it. That's all I do. I do the same thing every single day. I get up in the morning, I look for gaps, I make a watch list, and I scan them and I rate them, and that's what I do. And then I do what rates good. So the central structure to trading results must be a strategy with a solid foundation. And so for me, the foundation is gaps, okay? And that's based on accurately reading price action, and it's based on, again, advanced technical analysis. So set your goals for the year. Put a plan in action to achieve those goals. Again, you got 11 months to go. And you can empower yourself to do this. Again, the trading room is a support system. Me calling the trades live or sending out the picks for the options early in the morning, so you have plenty of time to figure out, okay, do I want to do AMD? Do I want to do the Qs? What do I want to do today? You know, I'm a support system for you. You still have to take the trades yourself. You still have to size your trades yourself. Okay? Any questions here so far? Anyways, precision and detail really count and matter. And so when I'm looking and rating things and looking for a good entry, I mean, it counts. I don't tend to chase things. A lot of people are not big on precision. Again, they'll buy anywhere and anywhere on any moving average or any indicator without any real detail, and then they wonder why they lose. Accuracy really counts in trading on all fronts, whether you're doing options or day trades. You need a quality strategy. You need to have a good risk reward, because you're going to have losers. I lose in trades. I will tell you right now, we shorted Apple last week. That trade I knew almost immediately that was not going to work, and I didn't kill it, and I should have killed it. So we did an Apple put last Friday. That trade is down. It will not work. It expires Friday. There's no way it's going to work. It's been down for days. So you're going to have trades that lose with me. So size yourself properly. You can't risk your whole account in one trade or one day. Anyways, we're also looking for the right entry, correct size, and a proper exit. So being successful in the market takes detail and a certain level of precision, which you learn in the class. Detail matters. It can make a big difference in making a lot of money, and it can make a big difference in losing. And so you have to learn what to do and when to do it. And this is, again, I say this is a skill set. And I brought up Shaun White because he's an Olympic athlete. And I could say any one of a number of Olympic athletes with the Olympics coming up. But if you train in a sport to be good at that sport, then that's what you're doing. You're not skiing and snowboarding and ice skating and bobsledding. You're not doing 10 different Olympic sports. You're doing one. And you're training for that night and day. Do you know what I'm saying? Now you don't have to live and breathe and eat stocks night and day. Although I did actually when I started trading. I just threw myself into it with my whole life for the first 3 years while I was figuring this stuff out. Now I have a normal life. But when I started and I didn't know what I was doing, I absolutely did train like an Olympic athlete because I didn't know what I was doing. And I was trying to figure it out. I was so motivated to figure it out. Like really wanted it badly. But again, if you think of it like it's a sport, that you need the proper training, and again, the replication, you're doing the same exercises, and you're looking for the same things, and you train your brain and your eyes to see it very fast and quick, then that's how you get good. Do you understand? A lot of people don't do that because they jump around and do too many different trading strategies. Does any of this make sense? Anything makes sense that I'm saying to anyone? Any questions here? Anyways, without a good strategy, you will never make a dime in the market. You will never get there. You may make money in some trades, you'll lose in others. You make money in some trades, you lose in others. You want to move forward. That's the point. So how much money do you need to do this? You need buying power if you're going to trade on margin. If you have options account, you just trade. It's a cash account. You set up as a cash account. What you have is what you risk. You can't lose more than that. You can sign up for the class. You can take the course. You can open up a trading account anywhere you want. Depends if you want to do options or day trades. Again, you can use any software that has live charts. You must have live data feed. You must have a daily chart. You don't have to pay for a scanner. If you want to, you can. But there's a million free scanners. So I don't think you need to pay for a scanner. And again, we can talk about that more later too. But it's about focusing on the right information. So it's not hard to find gaps. The key is to learn what are the good ones. And that's what you learn in the rating system when you're going through the class with me, how to rate the gap. So again, we're talking about all kinds of different numbers here. I'm using a beginner risk as 1,000. I could have used less. I could have used more. I could have shown 10 different examples of different types of accounts. It's the whole idea that when I first started trading, actually, and I had my first trade, which was a short, and I made what I call a comma day. I made over $1,000, and actually I remember it was a Netflix, and a short in, and it was a gap, and I made it in a minute. So I got out. I just hit right out, and I made like over $1,200, and I was like, wow. But again, I'm not trading for 6.5 hours like that. So when you consider the amount of money that you can make as fast as you can make it shorting, it's phenomenal, because then you can do whatever you want the rest of the day. So it is a lot of money when you think about it. When you think about, again, when I was doing mortgages, sometimes I would work on a loan for 6 months because people had to fix their credit, or they were looking to buy a house, and then the deal would fall through, and then they had to buy another house. I mean, it was like I was working with people and not making money until the deal closed. With trading, it's not that way. I go to bed every night, I'm flat at the end of the day in my day trades. I know exactly what I made. I know exactly what I booked. And the amount of work and effort I put into it is so easy compared to the work that I used to do. Do you know what I'm saying? Now, it might take you work to get to this point where I'm at, where you have to pay for my class and you have to go through the process of learning. But let me tell you something, it is worth it. Because once you learn how to do it and you know how to do it, and you're logging in the room every day just taking my trades, that's easy. So again, when you look at the amount of money you can make with the time you have to make it, it's so much different than a normal job. And I'm saying this as someone that again, worked in a very challenging time in a difficult industry in mortgages, because I was doing mortgages in 2007, 2008, when the mortgage industry was collapsing, when Lehman Brothers collapsed. Remember all that? With the bank bailout. Any other questions? So anyways, getting back to chart reading. If you do not know how to read a chart, you're going to learn that from me. You may think you know how to read it, but you're going to learn something new. You're going to learn how I read it. It's like a window into my mind when you learn the class. So again, if you don't know how to read a chart, if you've never read a chart, then you're basically trading blind. And that's not a good idea. So you're going to learn technical analysis from me. You're going to learn how to read a chart. You're going to learn how to book money too. And again, a lot of times it happens quick. I mean, you can have all the targets in the world, but I mean, when it goes, again, if you're ever heard any room videos, I say, take it. Sometimes you just look, you're up, out. You can always get back in. You've got to understand that booking money is part of the process. We're not buying and holding forever. Again, when I say we're trading momentum, we're trading it and we're getting the move and then we're getting out. And then we're getting the move and we're getting out again. Do you know what I mean? Any other questions here? So you need a business plan. You need to say, okay, I have this much money. I'm going to do this. I'm going to do this. I'm going to do this. You need to be organized. I'm very organized. I get up early. I live in New York, so I'm in the same time zone of the market. But if you're in a different time zone, you need to get a plan. When are you getting up? When are you having breakfast? When are you logging into the room? You need a plan of action. You need to figure out, okay, I'm going to get out of my, maybe you don't want to hold the options. Maybe you want to get out at 50%. Maybe you don't want to hold overnight. You need to get organized with what you're doing. I think a lot of traders, again, they've been at this for years, and they're not organized, and then people just get lazy. It's not going to work that way, that you're going to be successful if you're lazy. You actually have to get serious about doing it. At some point, if you actually want to make it, you must get serious about doing it. And I guarantee you that everybody that comes to me, when they come to me, is serious about doing it, because they're paying the money for the class. So they're serious. Anyways, when you start to trade, if you want to get out, again, 1 to 3 is good. Some of the trades we've done recently are huge, but I think $1 is good. Now, again, if I'm shorting, Netflix, $1 is great. AMD, could be a bigger stop, so you're trying to look for maybe $3 to $5. I mean, we're not doing crazy price stocks, I don't think. Every once in a while, you might do something expensive. And then cheaper things, lower end stocks, maybe 75 cents, 85 cents is good. Any other questions here? Again, I see some regulars, I see some new people. Well, I was just talking about the mortgage industry. Again, I can't even say, what's going to happen with AI. I don't think anybody knows. Do I think some people will lose jobs because of AI and automation and robots in the future? Yes. Does anybody know what industry or where? Not necessarily. But I do know that the world will be different 10 years from now and 5 years from now. So again, we just live in a different world. Things are changing. It's not even the same as 6 years ago post-COVID. We can be great employees and we can do a great job, and our whole industry could collapse, or things could change, or you may not make as much money doing what you used to do, or you might have to work more hours to make the same money, or things may cost more. And we've seen that already. We've seen high inflation. We've lived it. I still think inflation is too high. Again, they don't include housing with that, but to me, I still think we have quite a bit inflation, personally. I'm going to disagree with the reports, because I count a lot of things with that. Food, housing, Anyways, it is mind over matter sometimes. So if you've been at this for a number of years and you haven't been successful, I get it. You have to decide if this is something you want to do. You have to take it seriously. I try to make trading fun. I try to make the class fun. I try to explain things and basically go over them so that people from any walk of life can understand, beginner or advanced. But again, the class itself is a window into my mind about how I see something, and then how I can see that somebody's going to go to a certain place. you still have to assess, again, the risk, because every trade that you take has risk to it. You cannot make money if you're not willing to take risk. 2 days ago, I sent out an email. No, a couple days ago. It was last week. I called the market short. And I said, I should put that in the email. I don't usually put the notes section in the email when I'm doing marketing. I said, you may not want to do this trade, or something to the effect. I said, I get it if you don't want to do this trade. It was a Q put. But if you do this trade, it's probably going to go big. And it did. So, again, there's no substitution for experience. The reason I'm experiencing what I do now is because I've been trading for a long time, but it's not just that. There are a lot of people that are trading for a long time, and there are people that are teaching and trading for a long time. I'm doing nothing but this for a long time. So the level of experience I have with this one particular thing gives me like an extra layer of, I don't know if you want to call it, intuition or whatever you want to call it. But that's something that if you stick with the program, if you stay with the program, you will get better over time, because you never really gain that if you're just floundering around, jumping around from thing to thing to thing. Does any of this make any sense? Rick, I see you here. Did you do you got the trade I was talking about? Is Jerry still here? Jerry did too. Did you do the Q, or you didn't do it when you read the note? Anyways, getting back to what I was saying, you have to look at the share size. The money comes easily once you know what to do, and you have a system that directs you, and a mentor, which is obviously me. And I send a lot of emails. I send, notes like I'm saying, or breaking news alerts just so you know if you're in a trade, or I'm saying we're going now, it's hittings, like if you want to check to get out of it or something. Rick did it. Well, good for you, Rick. Jerry did it too. Oh, there you go. Anyways, again, having a mentor helps. You can ask me questions. And you can use the system for day trading, swing trading, or options trading. Again, if you cannot actively day trade every day, you can do the options. And you can hold overnight if you want to do it. How much you make is a function of how much you risk. There's no getting around that no matter what. But you're not going to make any money if you don't have a good system. So you can size yourself equally and correctly in all your trades, but if you have a bad system, you're not going to profit. So again, sometimes people want to be really tight with their trades. They want to scalp it or something. You're going to still have far more losses than winners if you're scalping, if you're not in the right direction. So, and the good risk to reward trades I'm talking about that we get when we do get the big trades, which is not every trade, but we do get some big trades. You've got to be in it to win it, but those cover the losses. Do you understand? When we get the big trades, they cover the losses. So, because you're going to have some that lose. And you can't be worried about that. You can't be stressed about that. You can't be obsessed about that. You need to be focused on winners. You can't be focused on losers. If a trade is down, it's down. You're not going to move it. Focus on the winners. Do you understand what I'm saying? And focus on winning. Focus on making money. Far too many people are focused on losing or trying not to lose. I don't even think about that. I take the trade and I size it. I size it and I put the stop in. That's it. The analysis is done before I even take the trade at all. Do you understand what I'm saying? Rose struggles on sizing. Again, Rose, if you're going to be new and you're going to do the class, if you're going to trade before the class, then I would go slow and risk a small amount before the class. If you're going to do the class and you feel like you've got it down, then you can risk a little bit more. You have to get used to the system. You have to get used to taking the trades. Again, it is a process that you'll go through, and everybody's different. I don't know everybody. Everybody comes to me, and I get to know people as time goes on. So again, you could have a $10,000 account, and you could say, I understand Melissa's system. She's calling good trades. Things are going well. I feel comfortable risking $500 a trade. Maybe for somebody, that's too much. So again, I don't even want to say a percentage, because you could have $1 million in an account. And then I don't want to say you could risk, 10% of your account, because maybe you're not comfortable with that. Maybe you're not comfortable risking $100,000 on a week. You could. You've got the money. Things are going well. But you know what I mean? So part of that is your personality too, what you're comfortable with risk. So I would say go slow to anyone and everyone at the beginning until you get the hang of it. And then you say, oh, yes, I understand this now. It is about the consistency of the share size, though. When you're taking the share size, you can't change it every day. So you say, okay, I'm going to risk $500 in every trade, and that's it. You're not risking 500 today and 1,000 tomorrow and 2,000 the next day. Do you know what I'm saying? What else? That was a good question. If you're ready and want to be a successful trader, learning what to do is really your greatest chance for success. Is Judy here? Judy, I don't see you chatting. Are you here? Judy is going to sign up. Judy, I did send you the forms. You know how to chat, Judy? Judy's husband did the class a couple years ago, and Judy is going to do it. And Judy gave me a really nice compliment. She said my class is the best class she's ever seen. That was really nice. And Judy's now going to do it. And Judy's going to trade. I don't know if you can chat, Judy. I think, you know, again, this for me is something that just is very meaningful to me, and I take it very seriously, what I do every single day. Again, it's because it was 3 years of my life. It basically just has a lot of meaning to me, what I do and my whole system. I don't think every educational place is like that. For a lot of people, it's very transactional, you know, trading and the class. For me, it's something special, and it will always be that way. It's not like there's anybody that will ever be able to replace me either. If I'm sick or have a doctor's appointment, I have an assistant that helps out. He was a student years ago, and he'll run the room, and he trades scaps with me, and he learned how to trade from me, and he did the class in 2014. But he's not a replacement for me, and there really is no replacement for me, because I designed the system, I created the system, and it has a lot of meaning for me. And I didn't do it for anybody here. I didn't ever do it to sell it. I didn't ever do it to start a business. It's probably the reason the class is so good, and all the information is just so raw. I really was in the trenches figuring out how to do everything for myself. And as I was going through the process, I was talking to a lot of my friends who were traders, and I was in a trading room at the time. And then one day, I think the person let me on the mic, and I started talking, and everybody started listening to what I say. And then I realized I also had a voice for teaching, which was fun, and I like to talk, which is why I talk on TV. And then I ended up starting a YouTube channel, and then it kind of just morphed into me having a business and teaching people. So it wasn't even like I set out to even do this in the format that I'm doing it now. But I do think that actually doing the class every month, which I do because I teach it, helps me. And it also reminds me how good the information is. And then running the room also, I think, helps me too, because it forces me as well to be disciplined and take it seriously too. Do you know what I mean? And for you, if you're trading alone, if you're a lone ranger and you're trading in your house or your office or something alone, you don't have anyone, you know, to guide you or say, hold it or do it or this is a good one today or whatever, then it can be very lonely and boring. So I try to make the room, you know, not only helpful for people, but fun. And logging in is something that people should look forward to doing. They should look forward to doing it. They should look forward to getting the trades, getting the calls, and making money, you know, and listening to what I have to say. So anyways, my class is called the Golden Gap System. It's one strategy, which is really all you need to be successful in the market. And again, I'm mostly short. You do not need a general, overall, broad-based view to make money. Tons of people have that, and they fail all the time. Learn how to read institutional money and the price patterns and gaps, and you don't need to do anything else. And you don't even need to do necessarily both directions. Now, I will go long too. I mean, I have no problem going long, but I'm telling you, I would say 90% of my trades are shorts in the room. And doing options, I would say it's more split. I probably still do more puts than calls, but I probably do more calls than I do longs in the room. You know? But if your reason for doing this is to make money, this will make you money. And I think people are generally surprised sometimes when they come and take the class how good it is, because they just assume that it's like so many other things, but it's not. You have to have an open mind. You may learn things from me that you didn't know and go against something that you used to do. you got to let that old habit go. Because if you came to me to make money and you were doing something and you were losing, then you have to let that habit, or, maybe it's an indicator. Maybe you're using an indicator that you used to use. But, again, if you were making money, you wouldn't need my class. So you may have to change some things or some bad habits that you have. Let it go. You know what I mean? Start fresh. Start with a clean slate if you come to me and you really want to learn. You know what I'm saying? Any other questions? How are we doing? Anyways, you will learn the rating system. The key to the system is the 26 points. And this is how I'm able to predict the moves the stock makes so accurately, including the market. So again, trading offers an unlimited income potential. It really is a dream job, and it's been great to trade in the winter. It's been so cold in New York. So if you want to do this, you can do it from anywhere in the world. Make your own hours, But again, the room is open in the morning. You have to be there at 9 a.m. We start at 9:30, and we go in the first half an hour of the day. If we're done in 15 minutes, we're done. So empower yourself today to trade. The Golden Gap course is a complete system to use to trade. It's all the pieces of the puzzle. You will learn the entries, you will learn the exits, you will learn targets, you will learn the 26 points, which is the system, okay? So the class is called the Golden Gap course. It is a full 2-day course on how to strategically find, pick, and play stocks that are professional bearish gaps. So again, every month I do the class for shorts, and it's online. It can be anywhere in the world. So the February class is 2 weeks from now, February 21st and 22nd, 9 a.m. to 5 p.m. Class tuition is $69.99. Class is online. You must email me for sign-up forms. Now, I'm doing a Blizzard package. I've been running it for the last week and a half. This ends Friday. This is the best value and the best deal because you get 3 classes and 3 subscriptions. And you get 2 one-hour mentoring sessions. So you sign up for the bundle. I'll tell you what's included in that in a minute. The Blizzard package is the option newsletter to the end of this year, trading room to the end of this year, market report subscription to the end of the year, 2 one-hour mentoring sessions with me. Those are the subscriptions. And you get 3 courses. You're going to do them all in one shot. You get the Golden Gap Saturday and Sunday, 21st, 22nd. Trends is Tuesday. And the options course is Thursday. It's a jam-packed week. The bundle class tuition is $89.99. So again, 3 classes, 3 subscriptions, 2 mentoring sessions. You're set for the year. And again, some people have asked if you need to pay on more than one credit card. I allow that as long as you pay the same day. But then you're in. You shouldn't have to be stressed then. You have the whole year. And again, some people have already joined. Some people have already joined. They're already trading. And yes, your subscriptions start as soon as you join. Yes, Jesse, the Blizzard package is still available through this Friday. I extended it. Yes, you're on the email list. I thought you saw that. E-Trade should be fine. You can set up your charts to look, very similar to mine on E-Trade. Now, whether or not you're set up to trade options or day trade, I don't know. You have to call E-Trade, but they can do all that. And all these places, Schwab and E-Trade, they have very good customer service. Some of these places will even jump on your computer and set everything up for you. Honestly, they want your business. So they will help you, and they will help you do it for free, obviously, if you have a trading account there. Any other questions? There's something else I was going to say, and I forget. Anyways, big night tonight, big day tomorrow, big day Friday. I feel like every day is a big day right now, so it's just, we go through these periods where it's like, oh my God, there's so much to do. And then sometimes it's a holiday, it's Easter, it's a little slow. And then it's busy again. So again, the time to trade is when it's busy and the trades are there. Because you can't force the trades to be there. Again, I called trades that we took into this week. Did I 100% know, that we were going to go to XYZ number when I first called the trades? No. But I knew that the trades would go in the direction I called them, which was, we did puts. So I said, the market's going to sell off. It took a little bit longer than I thought to sell off, but it still went where I thought it would go. So again, it's like everybody wants everything right away. I get it. But sometimes things take, and this is just life in general, things take longer than we think to happen. If you've been trying to trade for 25 years or longer than I'm alive, and you're like, oh my God, I'm never going to get this thing, don't feel down or depressed, because you can get it. This is not impossible. This is not brain surgery. It's just that whatever you're doing, you're not looking at the right stuff to make the decisions of what to trade. It's really just as simple as getting the direction right. If you get the direction right, you're going to make money. If you get the direction wrong, you're going to lose. And the reason I'm good at reading direction is because I'm good at reading gaps. That's what we had here. What else? Jesse, I think you should join, Jesse. You've been following me forever. Honestly, I wish you had joined last week. What else? Rose emailed me. I will email you the forms to sign up. Stephen, you're trading. You're going to do the class in March, hopefully. Joe, I see you here. You've been following me a long time too. I don't know. Kathy, you should come back. I don't know what happened to you. Richard, do you have any other questions? I talked for an hour and a half. It was a long lecture here today. It was a good lecture, though. Listen, if you have any other questions... Oh, you have one more? Richard said no. Okay. Email me here. And you can call me. Not tonight, though. I'm tired. You can call me here tomorrow if you have questions. And if you want to sign up, and you know you want to sign up, you can email me. I'll send you the forms tonight. We can try to get you in the room tomorrow and get tomorrow's trades. I'm probably too tired to look at anything tonight to figure out what we're doing tomorrow. I'm a morning person. I like to be fresh, and I like everything to be fresh in the morning for me. But I do get up early, and again, sometimes I send trades out like you saw at 7 o'clock in the morning. So, call me tomorrow if you have questions. Email me tonight if you have questions. What else? Rick said he loves me. Melissa, thank you so much. You're glad you came across me. You're so good. Rick, that is so sweet. That is the sweetest thing. Did you see the email I did? Rick is a farmer. For those of you in the email, Rick has cattle. I did an email with his cows. How are your cows doing, Rick? I tell you, it is so... I told my parents, I sent my parents the pictures of your cattle, Rick. I sent my mom and dad. I said, you're not going to believe this. This guy just signed up, and he has cattle, and he's worried about him freezing. It never surprises me how people from all over the world, I've had people from different countries, some people really even, like I'm talking to them on the phone, sometimes it's difficult to understand. Could be in a different country, speak a different language. I've had people, again, the fact that Rick's a farmer, like there are people that are doing all kinds of things, and they want to trade. It's like, I will never not be surprised every time I find out something that somebody is doing for a job or a career, or somewhere they live, or it's fun actually to know that people from all walks of life, any age, any country, any career want to do this. I think that's really a testament of how exciting the stock market is. And that was very sweet, Rick. Thank you for saying that. How long did you follow me, Rick, before you joined? Kathy enjoys listening to me. Positivity. Kathy, I know. You got to get back. Rick, how long did you follow me before you joined? I forget. 2 years. There you go. There you go. Well, I'm glad you did it. And you're going to do the class in 2 weeks. What else? Any other questions? Listen, have a wonderful, wonderful, wonderful evening. I will see some of you tomorrow morning in the room. And the rest of you, if you're interested, you can email me at melissa@thestockswoosh.com. Student as a class, you're welcome. Yes, thank you. Have a good night.